Welcome to the exciting world of international finance. In today's interconnected economy, businesses are no longer confined by borders. Companies are expanding globally. This presents incredible opportunities. It also comes with unique challenges. At the heart of this complex landscape are senior financial advisors. These financial professionals are the architects of global success. They guide multinational corporations through the intricate world of international trade and finance. Think of senior financial advisors as financial generals. They develop strategies, they navigate risks, they ensure financial stability. They are responsible for managing a company's financial resources across borders. This includes everything from managing currency fluctuations to navigating international tax laws. Their role is crucial for multinational companies. Why? Global expansion requires a deep understanding of international markets. You need to be able to make strategic financial decisions. Without skilled financial advisors, companies can face significant financial losses. They might even face legal issues. Senior financial advisors must be adept at navigating the complexities of the global marketplace. They need to understand the nuances of different cultures and business practices. They need to be able to assess and mitigate risks. They need to make sound financial decisions. It's a demanding role, but it's also incredibly rewarding.
International trade and finance can be a labyrinth. It's a complex web of transactions, regulations, and market dynamics that span across the globe. There are so many moving parts. From the movement of goods across borders to the fluctuations in currency values, every element plays a crucial role. Senior financial advisors help multinational companies navigate these complexities. They manage currency risk. They handle trade regulations. They analyze global markets. Their expertise is indispensable in ensuring that companies can operate smoothly and profitably on a global scale. Let's break down each of these key aspects. Understanding each component is essential for grasping the bigger picture of international trade and finance. Global market analysis is crucial. It involves studying market trends, economic indicators, and geopolitical events that can impact trade and finance. Senior financial advisors need to deeply understand the markets they operate in. This means staying updated with the latest market trends and economic reports. This includes analyzing economic indicators. These indicators provide insights into the health of an economy and can predict future market movements. They need to look at political stability. Political events can have a significant impact on market conditions and trade policies. They need to assess market trends. Understanding these trends helps in making informed decisions about investments and trade. These analyses help identify opportunities. By spotting trends early, companies can capitalize on emerging markets and new trade routes. They also highlight potential threats. Identifying risks early allows companies to take preventive measures and avoid potential losses. Trade regulations are another critical aspect. These regulations govern how goods are traded across borders and ensure that trade is conducted fairly and legally. Every country has its own set of rules and regulations. These can vary widely and can be quite complex. These rules govern international trade. They dictate what can be traded, how it should be labeled, and the tariffs that apply. Senior financial advisors need to be well versed in these regulations. They must ensure that their companies comply with all applicable laws to avoid penalties and disruptions. They need to ensure their companies comply with all applicable laws. Compliance is not just about avoiding fines. It's about maintaining a good reputation and smooth operations. This can be a complex task. The ever-changing nature of international laws and regulations requires constant vigilance and adaptation. Regulations can vary significantly from one country to another. This adds another layer of complexity to international trade. Managing currency risk is paramount in international finance. Exchange rates fluctuate constantly, influenced by a myriad of factors including economic data, political events, and market sentiment. These fluctuations can significantly impact a company's profits. A sudden change in exchange rates can turn a profitable transaction into a loss. Senior financial advisors use hedging strategies. These strategies are designed to protect against adverse movements in exchange rates. These help mitigate the impact of currency fluctuations. By using financial instruments like futures and options, companies can lock in exchange rates and reduce uncertainty. They also advise on the best currencies to use for different transactions. Choosing the right currency can reduce costs and improve profitability. These are just some of the challenges in international trade and finance. The field is dynamic and requires constant learning and adaptation. Senior financial advisors play a critical role in helping multinational companies overcome these challenges. Their expertise and strategic thinking are invaluable assets. They ensure smooth and profitable global operations. By navigating the complexities of international trade and finance, they help companies thrive in the global marketplace.
Strategic business and financial planning is the backbone of any successful multinational corporation. It is a meticulous process that requires careful consideration and detailed analysis to ensure that the company is on the right path to achieving its goals. This is where senior financial advisors truly shine. Their expertise and experience are invaluable in navigating the complexities of the global market. They work closely with top executives, providing insights and recommendations that are crucial for making informed decisions. Together, they develop a roadmap that outlines the strategic direction of the company. This roadmap is not just a plan, it is a comprehensive guide that aligns the company's resources and efforts towards achieving its long-term objectives. This roadmap guides the company towards its global objectives, ensuring that every action taken is in line with the overall vision and mission of the organization. This process begins with a thorough market analysis. Understanding the market dynamics is essential for identifying opportunities and threats. Senior financial advisors identify potential markets for expansion. They look at various factors such as market size, growth potential, and consumer behavior to determine the best markets to enter. They assess the competitive landscape, analyzing the strengths and weaknesses of competitors to identify gaps and opportunities. They analyze the political and economic risks. This information is critical as it helps in understanding the stability and viability of the market. It helps determine the viability of entering a new market. A thorough risk assessment ensures that the company is prepared for any challenges that may arise. Once potential markets are identified, the focus shifts to financial planning. This is a crucial step in ensuring that the company has the necessary resources to support its expansion plans. This involves developing a comprehensive financial plan that includes detailed projections and budgets. This plan outlines the resources needed to achieve the company's global objectives, including human resources, technology, and capital. This includes everything from funding sources to projected revenues and expenses. Identifying the right funding sources is crucial for ensuring the financial stability of the company. Risk management is an integral part of strategic planning. It involves identifying potential risks and developing strategies to mitigate them. Senior financial advisors identify potential risks that could impact the company's operations and profitability. These risks could be economic, political, or regulatory. Each type of risk requires a different approach and strategy. They develop strategies to mitigate these risks, ensuring that the company is prepared for any eventualities. This might involve diversifying operations to spread risk across different markets and products. It could mean securing appropriate insurance coverage to protect against unforeseen events. Strategic business and financial planning is an ongoing process. It requires continuous monitoring and adjustment to stay aligned with the ever-changing global landscape. Senior financial advisors constantly monitor the global landscape, keeping an eye on trends and developments that could impact the company. They adjust the company's plans as needed, ensuring that the company remains agile and responsive to changes. This ensures the company remains competitive in the global market, always striving to stay ahead of the competition. It helps them achieve their global ambitions, driving growth and success in an increasingly complex and competitive world.
Managing dividends and transfer pricing are two critical aspects of international finance. These elements are essential for maintaining the financial stability and growth of multinational corporations. These areas are often complex, involving intricate calculations and strategic planning. They have significant implications for a multinational corporation's financial health, influencing everything from cash flow to tax liabilities. Senior financial advisors play a crucial role in navigating these complexities. Their expertise helps in making informed decisions that align with the company's financial goals. They ensure compliance with international regulations, which is vital for avoiding legal issues and financial penalties. They optimize financial flows within the company, ensuring that resources are allocated efficiently and effectively. Dividend policy refers to a company's strategy for distributing profits to shareholders. This policy must balance rewarding shareholders and retaining earnings for future growth. For multinational corporations, this can be tricky due to varying regulations and market conditions in different countries. They need to decide how much profit to repatriate to the parent company, considering factors like tax implications and investment opportunities. They also need to determine how much to reinvest in foreign subsidiaries to support local operations and expansion. Senior financial advisors analyze various factors, including market trends, economic conditions, and the company's strategic objectives. These include tax laws in different jurisdictions, currency exchange rates, and the overall economic environment. They also consider the company's overall financial needs, such as funding for new projects, debt repayment, and maintaining liquidity. Transfer pricing refers to the pricing of goods, services, and intellectual property transferred between different entities within a multinational corporation. This practice ensures that transactions are conducted at arm's length. This is a complex area, requiring detailed analysis and strategic planning. It's subject to strict regulations to prevent tax evasion and ensure fair market practices. Why? Because transfer pricing can be used to shift profits to low-tax jurisdictions, thereby reducing a company's overall tax burden. This reduces a company's overall tax burden, allowing more funds to be reinvested in the business or distributed to shareholders. Senior financial advisors play a vital role in developing and implementing transfer pricing policies. These policies must be carefully crafted to comply with international regulations. These policies comply with international regulations, ensuring that the company operates within legal boundaries. It also ensures the company's financial activities are above board, promoting transparency and trust among stakeholders. By expertly managing dividend policies and transfer pricing, senior financial advisors optimize the financial flows within a multinational corporation. This maximizes profitability and ensures sustainable growth. It also ensures compliance with international regulations, which is crucial for maintaining the company's reputation and operational integrity. This contributes to the company's long-term financial health, enabling it to thrive in a competitive global market.